Hello, everyone, and a very warm welcome to today's major markets update for this historically important day, September 11th, 2024. Yes, we are tracking the Elliott wave, and I apologize if I am a bit late. I had to bring my son to a doctor's appointment, which took a little bit longer. And then when I came home, I had to walk my dog because his bowel movement does not wait for the market. So I apologize, but sometimes life just gets in between. So let's go straight to the charts and see if I can find the link real quick. Of course, the slides are there for your consideration. And let's go straight to the charts and see what we get. There we go. And actually, let's start off with some of our recent updates. This is the update from, I believe, Monday. And as you know, that we were looking for either an orange wave 4-5 to complete, or, and it wouldn't surprise us if that's the case, we said that we would look for a larger bounce to ideally 55, 20, 55, 60. Okay, so directly above 54.80 we said, and especially 5,500 takes the impulse path lower off the table. And those are, of course, trade trigger levels. And today we opened about even, dropped all the way to 54.06 and then higher. And this matches pretty well the alternative path, or actually that was the preferred path we were looking for earlier this week, right? So we said this can either be the 4, the 5, but we're already at the blue warning level for the bears. And then we've seen ABC, right? That's kind of what we're looking for, or this impulse lower. Well, we didn't get the impulse lower, quite obviously. So that was our, wouldn't be surprised if we would see a larger bounce, okay? And then yesterday, once again, also for the semiconductors, we said that it had reached most of its, or closely to, the ideal green 3, 4, and 5 target zones, if you remember. And let's see if I can find that chart here real quick for you there. So the 3, the 4, and the 5, and that we were looking for a bigger bounce. Okay, that's what we already had, of course, on Monday. Given that the index bottomed, topped, and bottomed rather closely to the ideal green wave 3, 4, 5 target zones for a standard impulse, see the SOX2 chart, we would not be surprised to see the WB2 wave develop from here on out, contingent on holding above Friday's low. So from a trading perspective, how do you put that to work? Well, you say, I'm going to bet on that stance, and then your stop loss is, of course, Friday's low. That is your contingency. Below it, and that would target 42.50, you can then switch the trade and go for that target zone. Okay, so if the blue wave B2 is underway, we shift our expectations towards the bigger bounce for the SP 500, NASDAQ 100, and the Dow Jones as well. Now, the Dow Jones diverged a little bit from the indexes, and I'll show you that in a minute, but otherwise, no real difference. Because remember, on the Dow Jones, we said that we would see a potential. Besides, so far, the Dow Jones has only done 3 waves lower into the gray wave A low. And as you know, after 3 waves down, always expect 3 waves back up. So the index could be working on the gray wave B2. Well, actually, that one already got completed, this one. It reached the target zone, was just a 1-day bounce, and actually today's low is then gray C, A, B, C. Okay, so we have question marks because we have so little information, but so far so good. And honestly, from a trading perspective, since the Dow is so uncertain, I would really not trade it. I haven't traded. Just wait for it to develop better. And I'm saying this so people that listen on YouTube can actually find out how we work and how we go about, and that things have been moving quite as expected. So then on Tuesday, we said the gray dotted path is still a tentative suggestion because B waves are tricky beasts, right? So that A, B, C higher. Let's see here, the ABC higher are tricky beasts, and we got pretty good there. Honestly, we'll show that in a moment, and that's what could be developing. The other option is we're going to new all-time highs in the form of a ending diagonal. More about that in a moment. Remember, corrective bounces are 3 waves. Ending diagonals are also in 3 waves. Then the first wave up, which is then the bounce from the August low into, for August 5th low into the mid-August high, was wave 1 of the ending diagonal. More about it in a moment. Let's start off with the Dow Jones. So this was the weekly chart we've been presenting, that there is a possibility for a final C wave higher into the 42,700 to 44,000 target zone, this C wave, okay, of wave 5 of 5 of 5 of 5. And honestly, that starts to now look better. So we've placed that B wave low here, and that could have been today's low. Now, what we find here is the daily chart of the Dow Jones. And indeed, we topped already for this gray wave B. And today we bottomed for most likely this gray wave C. The warning levels for the bulls held only for the last and the second to last warning level. As you can see, today's low was right at pretty much that third warning level, and it held. So there was no hit. It only is a hit if we close below it. Intraday low steps below it don't really count. It merely shows the importance of that level. And as you can see, the level was at 40,000 and we went as low as 39,993, off by 7 points. That's how critically important that level is. So then we did about a 50% retrace of this rally. This could mean that green wave C, I have it in this chart as gray wave C, is now underway to 43,060, 43,780. 4360 to what high did we say? 43,780. So that matches really well with all these target zones. So that means we can now have adjusted warning levels for the bulls. The first warning level is about 40,500. The second warning level is, of course, the gray wave A low at about 40,300. The third warning level is obviously today's low, and the final warning level is the August 5th low. As long as we stay above these, and of course, especially daily close below today's low will negate this option. As long as we stay above these, we can target this 43,000 plus target zone for this expanding ending diagonal wave 5. It would match really nicely, I must admit. So this is really no surprise, other than that bounce we had here was already then the gray wave B. And again, after 3 waves lower, always expect at least 3 waves back up. This green wave B here can always become more complex, protracted, that we are just in another bounce and another leg lower after that setup. But for now, this bullish candle must be respected. This is a very bullish candle in my humble opinion. So I expect higher prices contingent on holding above these warning levels. So if we break below 40,500, it's a first warning, etc. So use those appropriately. But you can see we're holding all these moving averages and warning levels. Again, the third warning level was reached. We broke below the first and the second one. So then you have to pay attention. But we did not break below the third one. And that means we can, I don't have it confirmed, but we can. And I must say, I prefer that this is going to be reached. Why? Also because seasonality has been thrown out of the window, and we might see a different pattern evolve. So here then is the SP 500. This is the wave count we've been tracking, saying we've completed this wave 3 and we are in this wave 4, and potentially all of the wave 4 already completed at the August 5th low. Okay, we knew that even if wave 4 became a flat, there was always a wave 5 waiting around the corner. So new all-time highs for the S&P 500 were pretty much all but a given, right? I would say 90% certain. This is our preferred wave count. So after 4 comes 5. So the question was, how is this wave 4 going to develop? Well, we had clearly 3 waves lower into the August 5th low. We then had 3 waves back up into the August high. Okay, so that is then often a B wave, and we were expecting a C wave lower And either the C wave would be 5 waves preferred for a flat wave 4, or 3 waves for a potential triangle, right? 4th waves can also be a triangle. They don't have to be a flat. So, something along these lines, something like this, right? It all depends, of course, how you draw these lines. But then you get an A, a B, and a C wave lower, and that's it. Now, we might, however, have already completed wave 4 at the August 5th low and are now working on a ending diagonal. So an ending diagonal is a 3-3-3-3 setup. Maybe I'm missing a 3 here, but 5 3s in a row. So then the first set of 3 waves suggests it's only corrective. Then we get the second set of 3 waves, which also suggests it's corrective. Okay, so the initial stage of a ending diagonal is undistinguishable between corrective price action and that of a move to new all-time highs, in this case for the wave 5. Now you can see here that at today's low, we pretty much retraced all of the previous 2 days rally off of last Friday's low. So this is then the ideal B/2 wave count. Why do I do it as AB? Well, because we can only get 3 waves higher. Sometimes ending diagonals are only 3 waves. So this would then be the suggestive path higher for a 3-3-3-3-3 move. And the thing is, once we bottomed in August 5th, we could not know that an ending diagonal was forming. It is like a unknown known. It is possible, but there is simply too little information to go by. However, with today's very bullish reversal, this is now a possibility. So we have broken above the first warning level for the bears, which was at about 5,500. We stalled right under the second warning level, which is, of course, the 5,560 that we broke below previously. That was the critical level to hold. The break below 5,560 we knew would open something as a drop to about 53, ideally 50, I believe it was, or 53.40 even. Well, we failed at that. But again, that was a relatively easy trade. Now, today's reversal is very bullish. However, this can still be, as we said in our Monday and Tuesday updates, just the ABC of a larger bounce, okay? Nothing here has been disproven. So this is still a possibility. We've broken above several warning levels on the hourly chart for the bears, but we're still, as you can see, right below 55.60. That was support before and we broke below it. Okay. So of course, obviously it is now resistance. It won't take much though for it to become eventually support again. So the ABC path we had here has filled in reasonably nice with today's low, of course, the B wave low, and now this C wave. So for the bulls to continue with their ending diagonal, certain levels need to hold. The first one is about 54.95, right? That is about the high at the open. Here it is 54.96, I believe it is. So the second warning level is then about 54.70. The third warning level is 54.35, and the final warning level is last Friday's low. We break below last Friday's low, and then this ABC is the preferred path. Other than that, so far the market has behaved as we thought it would on Monday and Tuesday. This was our preferred wave count. As you said, on Monday we wouldn't be surprised, and that then we would see this larger ABC swing. Okay, so far so good. So this has been progressing quite nicely. And I must admit for myself, most of my profitable trades are when I buy a dip, not when I sell a rip. Shorting markets, even in bear markets, is very, very difficult. I prefer to buy oversold dips. Like today was oversold, like last Friday was oversold, and you get, I believe, a more relaxed trading, but hey, whatever floats your boat. So these are the two possibilities. And as again said before, we cannot yet know beforehand if 3 waves up merge into a ending diagonal as shown here, or if it is simply a B wave. Most likely a B wave, but the market reserves the right to change it. So the warning levels for the bears are clearly on the chart, and we know soon enough if we have an ending diagonal. If we make a new all-time high, the ending diagonal is the preferred wave count. And again, that would not be too surprising, given that we were also looking for new all-time highs for this option here. Okay, we held above the second warning level. Okay, we put that second warning level for the Dow Jones at 40,000 for a reason. It's critical. It was the high here, it was the high there. These are critical levels, and it held here. It was a closing resistance there, broke below it, broke above it. Critical levels. So as long as pretty much today's low holds, we can target new all-time highs for the Dow Jones, and similarly for the SP 500. There you have very simple trading levels to use. All right, so moving on to the NASDAQ 100, an option here as well is that we are in this larger B wave bounce and then lower. So far, the Dow Jones of the S, oh man, so many indexes to take care of. It's just unfreaking believable. Anyway, we have 3 waves lower, and that's it. I cannot make it into 4 waves lower. We broke above 19,221, which was the A low. So it could have been a 1, 2, 3, 4, 5. Remember, that was one of the options we were tracking as well, this one. So far, and again, we broke above it. So one could have said, well, I'm going to take profits here. Fine. If you then break above the target zone, you can always re-enter. Yes, you can also say, well, I'm going to then short it with, of course, a stop at these stop levels. Okay. So this one is, of course, now off the table. And this is a possibility. So we're going to drop pretty soon then, potentially, and then rally higher. If we break above the August high, something else is going on, and this bounce might become more protracted. Okay. Similarly for the semiconductors. So the semiconductors, our preferred view since Monday was that we've most likely completed these 5 waves lower, the 1, the 2, the 3, the 4, the 5, and that we were on our way for this blue target zone, right? Let's see here if I can find it there. This, so far so good. Not a bad forecast. Not a bad forecast. Not that we were 100% certain about it, but we said this is preferred, continued on holding, of course, above last Friday's low. So anybody who then decides I'm going to take that advice should use that as a stop loss level. That's it. That's your risk. There is no risk. I cannot say this is with 1000% certainty what's going to be. But I do know that, you know what? If the decline is reasonably accurate for a standard impulse lower, as you can see, 3, right where it had to, 4, missed it a little bit, 5, a little bit below it, but not by much, then this is most likely the case. Again, this B/2 can become more protracted. We don't have to do it all in one day, but we've already reached the target zone. So far, so good. This is not a bad idea. I also want to point out that this red wave B2 can also become more protracted. Okay, then we have something like an A, a B, and a C wave, something like that going on. Okay, or this is A, this is B, this is C for a B wave, and then another. A lot of options here on the table. But for now, and again, the B/2 in blue was the preferred path, and that has been so far proven correct. IWM. Well, the IWM has been a disastrous mess for a long time, and I haven't covered it too much. But I think with today's candle, we might start to see some light at the end of the tunnel. So this was one of the wave counts we were tracking, that we would see this wave C of C of C of B all the way into the 230s to 240s. Well, how can that then be attained with this very sloppy price action? Well, then the recent high was wave A, today's low wave B, and now we're in this green wave C. The green wave C should ideally target all these target zones, right? So the green one, the red one there, and the black one there, okay? So we have complete overlap in this region, 240 to 250. So this is a very logical target zone for wave C of C of C of B. So if we start breaking higher and the warning levels are on the charts for the bears, this is then our preferred wave count, and the warning levels for the bulls are also on this chart, showing that we held the third warning level on a closing basis. We did close below it on Friday, as you can see. So that was definitely a worry, and it's okay if one then gets stopped out, and you can always catch the next boat. But this is certainly a possibility. Again, the IWM is for me the least certain of indexes. It's been very cumbersome and very discombobulated with a lot of overlap. So it's not as clean as some of the other indexes like the Dow Jones or the SP 500 at this stage. So how we're doing on market breadth, again, remember the AD line made a new all-time high. That's not bearish, and price might follow it. So please be aware. And AD line has not confirmed the bear market at all. How we're doing on the PMO buy all, sell all indicator, it is bottoming out in the ideal bottoming zone. So this starts to suggest downside is very limited. This starts to suggest that we have to start looking higher pretty soon in price, and of course the indicator as well. I like it when it moves from excuse me, overbought at the topping zone to oversold in the bottom zone, to overbought in the bottom zone, to oversold in the bottom zone, etc. So this is really following up nicely. And then last but not least, the McLaren oscillator, it actually ended down a little bit. So it was definitely a big tech rally. So the summation index is, I believe, still pointing lower. Let's see if I can find it there. So it could soon be on a sell signal. But please remember, this market has defied these sell signals several times now this year. Between January and almost March, the market marched higher, whereas internal market breadth was weak. And the same here in between June and July. Internal market breadth was declining, but price was increasing. So this could, again, just be a simple reset, allowing for higher prices. But as always, the window for a look into the markets on Wall Street is never entirely clean. There's always some smudge on it. This is the only smudge. Could this be the right smudge that makes the whole window dirty? For sure, it can be. But some of the other indicators, like, for example, the PMO, starts to suggest we're getting closer to a bottom than to a top. But please note, of course, this thing can stay low for quite a while. But again, then we need to see a reaction to the upside. So this is where we are currently. Okay, no real surprises. This was already shared with you last week. And it looks like this has now developed correctly as such, with an A, a B, and a C higher. We did top in the ideal B wave target zone on Monday, and then Tuesday and today was the C wave. And as such, there is potential for the wave 4 already having completed on August 5th for the S&P 500 as well. That can then be resolved as a ending diagonal of 3333. We need, of course, more information, meaning a new all-time high, to really confirm this is the case. Okay, I'm merely pointing out at this stage the potential. And as long as we hold above today's low, which is pretty much equal to Friday's high, Friday's low, then this is a given, so to say, right? Then I'm going to look for this. Then this is the most likely. And of course, the ABC that we've been looking for has so far filled in quite nicely. And if we start breaking higher, especially again above the August high, then we won't see this green C wave, and we're going to look for this one. Okay. So I really like today's candle. It is bullish. We're back above pretty much all the moving averages, just a little bit below 20-day, but it won't take much to break above 55.60, which was support here in August, and which didn't hold last week. And we're right back above it. So watch those levels. New all-time high, I'm going to look for 6,000 for this larger wave 5, or 5 in the form of an ending diagonal. We break below today's low, and which is about equal to last Friday's low. I'm going to look for about 52.60 plus or minus 20, somewhere around there. It all depends on what the C's versus A relationship will be, and where exactly this green wave B will top. But again, we have to break below Friday's low. These are the warning levels for the bulls in case we start breaking lower to watch, and then you know where this is going to end up. All right, that's the simple bottom line message from these charts. And again, if we just get 3 waves up, 3 waves down, an ending diagonal is possible. And this is pretty much the earliest warning you can get that this ending diagonal is underway, because most of the time it takes 75% of the data before we actually get a good grip and grasp of it. All right. Same for the NASDAQ. The NASDAQ 100 as well can do still a bounce, an A, B, and a C, but above the August high, and the corrective pattern will be more protracted, and we might actually even see new all-time highs in NASDAQ 100 as well. Semiconductors have done so far what we preferred already since Monday, that we've bottomed for this wave 5 and now in this B/2 wave, which once again can become more protracted. I cannot predict the future. I just know that it is a possibility. For now, this also starts to look higher, contingent, of course, on holding above key levels. Let's see if I can find those key levels for you. No, not this one. No, not this one. And never mind, we'll move on. And last but not least, the IWM. Well, for the semiconductors, of course, the first warning level is, of course, today's low. The second warning level is yesterday's low. The third warning level is, of course, Monday's low. And the final warning level is, of course, last Friday's low. That's the warning levels for the bulls. IWM can still reach into the 240s, okay, for a complex C of C of C of B, as shown here, with the Fibonacci extensions, which have picture perfect overlap between 240 and 246. This is a confluence of target zones. Okay, the black one, the red one, and the green one, which are, of course, all various degrees of C waves. AD line made a new all-time high late August, suggesting we should watch for higher prices. The PMO is bottoming out, also suggesting we should start to look for higher prices. However, the McClellan oscillator is still negative, and thus more stocks are declining than advancing. So that one is a little bit counter. But I think the overwhelming weight of the evidence is that we should look higher, contingent on holding above today's low at a minimum. Take care, trade safe, catch you all later. And once again, I apologize for the late update, but sometimes life simply gets in between. Take care. Bye.